Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com. Welcome back to the show, Ted. Markets has changed since the last administration in the U.S.
Well, I think with the election of Donald Trump, it's definitely set a turning point, or certainly a changing point, if you will, in terms of market sentiment and mood. I mean, we saw this with the sort of manic depressive move on election night, and I think, you know, in probably a little bit more mellower terms, we're going to continue to see these ups and downs over the next few years under a Trump administration, mainly because the Trump administration, at least at the outset, will be providing investors with, you know, a few surprises, and that is actually something they're not used to, you know, either under Barack Obama or George Bush. Those administrations, you know, you could basically predict where they were going and their attitudes, but we don't have that comfort with the Trump administration, because his style is admittedly one of surprises. He has said he does not want people to know where he's coming from, because that's not how he negotiates business deals, and that's not how he's going to, at least at the outset, address public policy. So markets will have to adjust to this, and I think they already are adjusting. We have seen some pretty dramatic swings in insider sentiment this month of November already, and you know, for the past 7 years or so, our indicators, insider sentiment, is kind of lumbered along, moving up, moving down, but not very volatile, except when we've had these sort of flash events like flash crashes or Brexit. Then insiders would react. But generally, the Fed, you know, has, along with some help from some other central banks, has took the volatility anyway out of the market. And the economy, for that matter. I mean, the U.S. has been on a sort of slow growth path, nothing too exciting, but, you know, no big ups or downs for the past number of years. Well, I think investors are going to be bracing for some changes, and that means investing styles to succeed in this market are likely going to have to change as well.
And so the investment style we have, and what are we going to? Well,
I like to call what we've had is sort of the dipper market, where you could buy the dips because you knew the Fed was there to, whether with low interest rates or quantitative easing, was there to keep asset prices inflated. Or in Vancouver, you could buy a house, and of course it would just go up 20 or 30%. You didn't have to think about it. But unfortunately, those days are in the rearview mirror. Not only, you know, in terms of local real estate in Vancouver, not only do we have these governments you know, coming kind of late to the party, trying to do something, but now markets have actually intervened, and you've got interest rates moving up. So we've definitely had a sea change with respect to the investing in environment with respect to interest rate fundamentals. We've seen a big move up in interest rates following the Trump victory, on the assumption that he will juice the economy through tax reform or deficit spending. And again, no one really knows exactly the makeup of that, you know, how dramatic the spending would be, or, you know, we know he wants to cut taxes. significantly, but, what will actually make it through, we don't have a sense of that yet. But, right now investors are not taking any chances. Now, what we see insiders doing in the United States, for example, they are actually selling, bank stocks, which have benefited from this rise in interest rates. Banks tend to do well once the yield curve starts what we call steepen. That is, the rates sort of longer out, 10 years, are higher than the shorter rates. That usually helps to boost profit margins. While insiders had been buying the banks for a long time, basically for years, and now their payday is here thanks to Donald Trump, and they're starting to take some money off the table. Now, this profit taking will probably play out over a number of weeks, if not months. So the banks in the U.S. may still have room to run here. But where the insiders are putting their money are in the utilities and also in the REITs. You'd have been beaten down on a relative basis here, if not on an absolute basis, in light of the Trump victory because of rising rates and investors thinking, well, rising rates aren't good for REITs. They have to pay more for mortgages, and utilities, they have to pay more for borrowing money. However, that does forget that for utilities, the Trump administration is also promising and planning to scrap the clean energy initiative of the Obama administration, and that should be positive for conventional utilities, those that have to rely on things like natural gas and coal to fire up their generators. So insiders like the utility space. They like the REITs. REITs can often do well in a stagflationary environment, and they're starting to take profits in banks. In Canada, we have insiders liking the industrial metals area. In the Canadian Insider Index, which tracks 50 stocks in Canada that insiders prefer. Two of the top performers since the Trump victory have been first Quantum, which is basically a copper miner based in Vancouver, and Teck Resources, which is a coal and industrial metals miner also based in Vancouver. They've been doing quite well, and they're actually up again today on Wednesday. They're leading the index with some significant gains. Last time I checked, Tech was up almost 2%, and First Quantum was up over 1%. So insiders like this area, and it's unusual to find insiders moving the same way as the market. Usually they go against it. Usually they take profits when things are going up, and they buy when things are going down if the fundamentals justify it. When you see insiders kind of going with the flow, then that's very interesting. So there seems to be some insider confirmation that we are going to get a global reflation. Maybe it's based on wishful thinking. Insiders are not infallible; they could be wrong, but it's a nice confirmation to see that they're not taking a lot of money off the table across the board in industrial metal stocks. I mean, we have seen a little profit taking at Teck Resources, but nothing really substantial at this point. So we do have this, what I call now the swingers market. I call them the Trump swingers, where investors who kind of follow a swing trader approach that is sort of going with short-term momentum trades and sticking with that until they can see that runs out of steam, and then maybe going the opposite way. That will probably dominate under the Trump years, at least the early years, compared to the dipper market where you just bought the dip, because the central bank was going to be there to keep pumping up assets. In this case, what we're going to see, I think, is investors are going to kind of hedge their bets. They think that we're going to see a reflation, but they're not sure yet. Is it going to be the real thing? Are we going to see real growth opportunities, or is it basically going to be the Trump administration pumping up the economy artificially with a lot of government debt? And the implications are quite different for investing, but at this point we don't know, and we will expect to see some winners and losers emerge quite sharply once that picture becomes clearer.
One analyst predicted a 10% increase in coal simply because Trump says he wants more fracking and more emphasis on coal.
Well, then, you've also got the supply demand issue, and there's nothing that will hurt the prices more in the long run than more supply. So whether that translates into higher share prices beyond what we see now remains to be seen. Certainly in Canada, what we see, insiders are favoring the natural gas space over the oil space. I mean, we are seeing some buying in the oil space. It's not exclusively natural gas, but natural gas seems to have caught the attention and the interest of insiders a bit more than the oil space. In the Canadian Insider Index, for example, we added 3 natural gas focused companies in Canada, Paramount Resources and Trilogy Energy, just in a rebalance or semi-annual rebalancing in November, and those are 3 relatively natural gas focused Western Canada companies, and we didn't add any oil focused firms. So in that rebalancing, certainly through our screens, we came across natural gas as being the favored area of the oil and gas space.
And of course, China has seen what happens when you rely on coal to provide energy for your industries. There's no air left for people to breathe.
Well, that's the very interesting dimension to what's going to unfold here with the Trump administration, and why, again, this sort of swing mentality is probably going to dominate the market. So we have the Trump administration basically saying, this climate change thing isn't a big priority. But you've got the world's second largest economy saying it very much is a priority, and for probably very good reason. The reason you mentioned is that at some point they'll want to clean up the air in some of their major cities in China. So just because the U.S. maybe lags here on and we don't know. Again, we don't know if they're going to lag on their greenhouse commitments. They don't seem under Trump to be gung ho on them. So, that will have implications, certainly for North America. And I think it will also make it all the more important for Canadian producers to have natural gas pipeline access to the West Coast to be able to service Asian markets. So, there'll be a lot going on, obviously, in the next year with the Trump policies coming more in view in terms of what's going to happen. And interestingly, there's a BC election coming up, of course, in May. It'll be interesting to see if we're able to get one of the major LNG project green-lighted before the election. Who knows? But given the firming up of natural gas prices, it seems favorable that's going to go ahead. But I wouldn't bet on that. I don't know. I don't have any inside information on that. But certainly, with natural gas trading at $3, it's a lot better environment than when it trading at $1.80. So, on the other hand, though, there are lots of competitors that are emerging in the Middle East that I'm sure will be a factor in whether BC projects get the green light. So there's a demand, but there's also the competing supply considerations, and maybe that will. Pardon the pun, but maybe that will trump the day. But for Canadian producers, hopefully they'll get an export valve to Asia.
We'll have more with Ted Dixon right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. Ted, the shine seems to be off gold right now.
We published a piece on our CanadianInsider.com site, and your listeners can take a look at it, addressing the situation with gold, basically from a fundamental interest rate perspective. With interest rates, skyrocketing on the, relatively speaking, compared to what's been happening on the long end, that's taken some of the wind out of the sails of the gold market. The blog post is called "Climbing Real Yields Continue to Test the Mettle of Gold Mining Insiders." And when you look at the relationship between long-term real yields and the gold price over the past year or so, there's a very nice fit. Investors seem to be focusing, at least in the short term, on real yields and the gold price. And, following the Trump victory, real yields has shot up. Now, I'm skeptical that these real yields are going to persist. Already today, on Wednesday, we've seen the 5-year real yield go back to zero. Before Donald Trump was elected, the real yields were negative. 5-year real yield in the U.S. On the 8th of November was minus 23 basis points. It got up to 6 basis points or so last week, and now it's back down to zero. Now gold's getting basically pelted today, but I think these day-to-day gyrations, you've got obviously these day traders knocking things around, and there was some economic data that came out today that did push up bond yields. The ECB was out with some statement that pushed up bond yields, but today, this afternoon in New York time, the bond yields started, at least on the sort of the middle end, started to cool off a bit. So we'll see if that helps the gold price firm up. But for the short term, those who are concerned about the direction of gold should keep a close eye, we think, on real yields, and that may give some indication of the direction for gold in the short term. Of course, there are other factors as well, but that's one of the ones to look at. In terms of gold stocks, insiders have been buying here on the sell-off, but they're longer-term investors. We don't have a signal yet that a near-term bottom is in gold stocks. We would need to see a sort of a peak in insider sentiment. We see it building, but we don't see it peaking yet. That could happen at any time, but it's not there yet. The nice thing about insiders is too that they're able to often get into attractive private placement deals that a lot of investors can't, or just aren't aware of. It happens so quickly when these prices go down that they're able to average down their costs. So it's very encouraging to see insider buying in the gold area as the gold price falls off. We'll have to stay tuned though for gold to find its legs here, and I think real yields will be a good key to that once real yields stabilize, and I think kind of we get a reality check that all of a sudden that if Donald Trump is going to deliver the silver bullet that really gets the economy going in a real sense, let's see the money, let's see how it's going to work. And if anything, I think we must be near a point where we're going to see these types of interest rate rises at least consolidate. I could be wrong. I'm not a fixed income specialist, but we've had a big move, and we've yet to see the proof in the pudding from Donald Trump. There's certainly a lot of high expectations, and he has sent some good signals with respect to things like regulation. You know, for once I hear a politician say for every regulation we're going to bring in, we're going to get rid of 2. I think that's great. That was a fabulous policy announcement he made on his video the other day. But, you know, I mean, he's tearing up the TPP, which, you know, is dramatic. I mean, it works out to about just under, I think, I was looking at the numbers, $1 billion a year in growth in the U.S., which is not a lot. So, I mean, but within the TPP, it was going to reshuffle the, you know, redistribute the pie in the U.S. economy a lot more than the net growth. So you were going to get the manufacturing was going to be a big, you know, relatively big loser, and the service sector was going to be a big winner. Well, that's all gone now, and we're back to the status quo. Its impact on net growth, the fact that he's leaving that, you know, won't be such a big deal. But, you know, if he clamps down on immigration, doesn't get his tax reform through, you know, then it's a different ballgame. But, you know, we're not there yet. We have to see, you know, and this is why I think the markets are going to be unsettled, and you're going to see a lot of swings, certainly in the first year or 2 of his administration.
Ted, thank you so much for chatting with us.
It's great to be back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, their website, CanadianInsider.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions can be sent to info@HowStreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.